Did you know that if you had invested just $100 in Amazon's initial public offering in 1997, it would be worth over $1 million today? Intriguing, isn't it? This is the captivating world of stocks and shares, a realm where fortunes are made and sometimes lost. It's a space that's often misunderstood, shrouded in jargon and complex concepts. But at its core, it's about understanding and strategy. Let's start with the basics. What are stocks and shares? In simple terms, they represent ownership in a company. When you buy a stock, you're buying a piece of that company, becoming a shareholder. As a shareholder, you have a claim on part of the company's assets and earnings. Now let's delve into some key terms. Dividends, for instance. These are a portion of a company's earnings that are paid out to shareholders, usually on a regular basis. It's one way you can earn money from your investment. Then we have market capitalization, often referred to as market cap. This is the total value of all a company's shares of stock. It's calculated by multiplying the company's share price by its total number of outstanding shares. It's a quick way to gauge a company's size and potential value. Lastly, let's talk about stock exchanges. These are marketplaces where stocks are bought and sold. Think of them like a farmer's market, but instead of buying and selling fruits and vegetables, you're trading shares of companies. It's important to remember that investing in stocks and shares isn't just about buying low and selling high. It's about understanding the companies you're investing in, their potential for growth, and how they fit into your overall investment strategy. Investing in stocks and shares isn't a gamble. It's a game of strategy and understanding. So let's venture further into this intriguing world in our next segment. Not all stocks are created equal. There are different types, each with their own advantages and disadvantages. Let's dive into the first category, common stocks. These are the most prevalent type of stock that companies issue. When you buy common stocks, you're essentially buying a small piece of the company. You gain the right to vote at shareholder meetings and the potential to earn dividends, which are a portion of the company's profits distributed to shareholders. For example, if you own common stocks in a tech giant like Apple, you'll have a say in corporate decisions and possibly receive a share of their profits. Next, we have preferred stocks. Holders of these stocks are given preference over common stockholders when it comes to dividends. This means if a company decides to distribute dividends, preferred stockholders will receive their share before common stockholders. Moreover, in the unfortunate event of a company's liquidation, preferred stockholders are first in line to claim any remaining assets. Imagine you hold preferred stocks in a luxury car manufacturer like Tesla. If Tesla were to distribute dividends or, heaven forbid, go bankrupt, you'd be at the front of the queue to get your investment returned from the liquidation of the remaining assets. Lastly, let's talk about mutual funds. These are not a type of stock per se, but they are a way of investing in stocks. Mutual funds pool money from many investors to purchase a diversified portfolio of stocks, bonds, or other assets. The beauty of mutual funds is that they offer diversification and professional management. Let's say you invest in a mutual fund that focuses on the healthcare sector. Your money will be spread across many different healthcare companies, reducing the risk that comes with investing in a single company. Each of these types of stocks and investment strategies carries its own set of pros and cons. Common stocks may offer high returns and voting rights, but they also come with higher risk. Preferred stocks provide more stability, but typically offer lower potential for profit. Mutual funds offer diversification and are managed by professionals, but they also come with management fees. Knowing the difference between these types of stocks can be your first step towards successful investing. Buying stocks isn't as hard as you might think. It's as easy as shopping online with a few more clicks. Imagine you're in a grand marketplace filled with all sorts of goods. These goods aren't your usual groceries or clothes, but companies. Yes, you heard right, companies. When you're buying stocks, you're essentially buying a piece of a company, a slice of that corporate pie. Now, you can't just walk into this marketplace, cash in hand, and buy a piece of Apple or Google. You need a middleman, someone who has access to this marketplace. Enter the stockbroker. Stockbrokers are licensed professionals who buy and sell stocks on your behalf. Think of them as your personal shopper in the world of stocks and shares. In the old days, you'd have to call up your broker, tell them what you want to buy, and they'd make the trade for you. But today, thanks to the internet, You can do all this with just a few clicks on your computer or taps on your phone. This is where online trading platforms come into play. These platforms, also known as brokerages, are like your gateway to the stock market. They give you the tools you need to buy and sell stocks, right from the comfort of your home. You can browse through different companies, see their stock prices, and decide which ones you want to invest in. It's like shopping on Amazon, but instead of products, you're buying stocks. Once you've set up an account with a brokerage, the buying process is quite straightforward. You find the stock you want, specify how many shares you want to buy, and click the buy button. Just like that, you're now a part owner of a company. But remember, buying stocks isn't just about clicking a few buttons. It's about making informed decisions. You need to research the companies you're investing in, understand their business models, and keep up with market trends. With the right tools and knowledge, buying stocks can become second nature. Investing in stocks is not without risks, but with risk comes potential for great rewards. Now, let's delve into the world of risks and rewards in stock investing. First off, it's crucial to understand that investing in stocks is not like putting your money in a savings account. It's a volatile arena. The value of your investments can swing upwards or downwards based on various factors such as economic conditions, company performance, and global events. One day you might be celebrating a hefty profit. The next day you might be staring at a loss. Take the case of the dot-com bubble in the late 90s. Investors were pouring their money into internet-based companies, drawn by the allure of quick and massive returns. However, when the bubble burst, many investors were left with significant losses. This scenario underscores the risk of market volatility and the importance of not putting all your eggs in one basket. But let's not forget, where there's risk, there's also reward. The story of Amazon is a prime example. Back in 1997, a share of Amazon was worth just under $2. Fast forward to today, and it's worth thousands. Those who took the risk and invested early, even amidst doubts and fluctuations, reaped incredible rewards. Another potential reward of investing in stocks is the generation of passive income through dividends. Companies often distribute a portion of their profits to shareholders as dividends. If you've invested in a company that offers dividends, you could receive a regular income without lifting a finger. The tale of Coca-Cola investors is a testament to this. Since its first dividend payout in 1920, Coca-Cola has consistently rewarded its investors with dividends. Those who invested early and held on to their shares are now enjoying a steady stream of income. But remember, not all stocks pay dividends, and not all booming companies are guaranteed to succeed in the long run. It's a game of calculated risks and patience. In essence, investing in stocks is a roller coaster ride. It can be thrilling, scary, and potentially profitable. But one thing is clear: knowledge is your best defense against the unknown. The more you understand about the risks and rewards involved in stock investing, the better prepared you'll be to navigate the highs and lows. As with any investment, understanding the risks and rewards is crucial. So strap in, hold tight, and get ready for the ride of your financial life. Investing isn't just about making money. It's about making smart decisions and managing risk. When it comes to investing, one key strategy is diversification. Imagine not putting all your eggs in one basket. The idea is to spread your investments across different types of assets to reduce risk. If one investment isn't doing well, others might be thriving, balancing out your overall portfolio. And remember, risk management is not just about avoiding losses. It's about understanding the potential downside and ensuring that you're comfortable with it. This might involve setting stop-loss orders to limit potential losses, or regularly reviewing your portfolio to ensure it aligns with your risk tolerance. Another important aspect of successful investing is having a long-term perspective. While it can be tempting to chase quick profits, remember that investing is not about getting rich overnight. It's a marathon, not a sprint. Patience and persistence often pay off more than trying to time the market. Consider the story of a tortoise and a hare. The hare might sprint ahead initially, but it's the tortoise's steady pace that ultimately wins the race. The same principle applies to investing. Consistent, steady investing often leads to better long-term results than trying to make a quick buck. And finally, never stop learning. The world of investing is always evolving, and staying informed can help you make smarter decisions. There are plenty of resources out there, from books to websites, that can provide valuable insights. Investing successfully is about more than just picking the right stocks. It's about having the right mindset. So, are you ready to dive into the world of stocks and shares? We've unraveled the basics of investing, explored the different types of stocks, discussed how to buy and invest, and weighed the risks against the rewards. We've even shared some tips for success. The world of investing is at your fingertips, brimming with opportunities. Don't let fear or uncertainty hold you back. Remember, the journey of 1,000 miles begins with a single step. Subscribe to this channel and start your investing journey today.